Good evening, fam. Hope everybody's doing good. If you guys can hear me, drop your locations in the chats. We'll get started in just a few moments. It's 8:32. Probably look to start at about 8:35. I hope you're all doing well. Again, drop your locations in the chat if you can hear me. Feel free to send this link out to anybody. This is a open session. I appreciate y'all, and I'll see you in just a few moments. Alright. Let's get the screen set up here. Get me in view. What's going on, family? What's going on? Let me get the chat back over here. We're gonna keep the music on tonight. Hopefully it's not too loud. Hopefully it's good in the background. Let me know in the chat in case it is too loud. If you can't hear it at all, that'll be fine too. But I'm gonna vibe out to it for sure. Let's see what we got in the chat here. See who we got on here tonight. We got Chicago in the house. We got Chino, what's going on? Johnny from New Mexico, what's up, bro? Kim, Brooklyn, what's going on? Kim, good to see you. We got Cody in the house from Illinois. We got Sean in the house tonight too. What's going on, bro? The chat is also now in subscriber mode, family. So if you cannot write in the chats, you will need to be subscribed. Again, not making you subscribe, or you guys can hang out, enjoy the content for free. That's absolutely okay. The chat is currently set that way. Alright, who we got? We got the Philippines in here. Uriah, what's going on? Good to see you. The Philippines, huh? It's gotta be... Sheesh, it's gotta be pretty early in the morning over there, no? It's gotta be like 7 o'clock, 8 o'clock in the morning over there. So, definitely appreciate you. You're just starting your day. That's good to hear, good to know. Let's see what else we got. Alright. So family, tonight we're going to keep this stream pretty quick, pretty simple. I do want to give everybody a few updates from what we talked about on Sunday. If this is your first time with us, first off, welcome to you. We do these streams Sunday, Wednesdays, and Fridays. So we do like market outlook, kind of a midweek market update, and then we finish the week out with a kind of a Friday recap. So welcome if you are new. Let's see, I did want to take a look at some of the stuff we did last week, but I wanted to give everybody a little bit of an update on some fundamentals before we jump into that. So let me grab that screen real quick. Let's drop this over here. Let's just take a look at the fundamentals, right? Let's just get a quick little update on some of the stuff that happened this week already and kind of what we're still looking at. So let's get the full week up. Again, we're only looking at typically high impact news. So let's just bring that up real quick. And let's do a little quick recap. So some of the news we were watching personally, again, if you guys were on that Sunday call with us, right? So if you were on Sunday's call, we were kind of taking a look at this. And we were looking at things like the pound, right? Because we were looking at things like GJ, and we will be looking at GJ again tonight. We kind of talked about how they had PMI coming, probably wasn't going to be good for the currency. and we were looking on the short side of GJ. So we'll kind of break down, what happened there. I unfortunately didn't get to capitalize on any of those movements. We actually took a little bit of a loss on GJ, just to be kind of transparent. So we'll kind of go over that tonight. Again, nothing too amazing here. We kind of expect things like PMI and CPI to kind of always be in this bearish kind of outlook for most currencies. We had Lagarde speak. We had some interest rate decisions out of New Zealand. We talked about this, how they were forecasting a 50 basis point hike. They did do that 50 basis point hike yesterday. The New Zealand dollar, I think, got some strength off of this. Again, I don't particularly trade the New Zealand dollar myself. We talked about how that when rates do increase, typically it makes that currency more appealing. So you could have expected some NZD strength. Again, not a pair I typically trade, so I kind of brushed the news off myself. And then we had some interesting USD news. We had the FOMC meeting minutes, which is basically just the transcript of what the Fed talked about 2 weeks ago. And we kind of touched on our expectations for this, right? We kind of already know where the Fed is, what their plan is. We knew they weren't really going to change anything. We weren't expecting anything drastic from this, to be quite honest with you. But just to give you guys an update, maybe if you missed it today, basically what the Fed is committed to is keeping interest rate hikes at this 50 basis point, right? The same thing we saw out of New Zealand, where it kind of goes up 0.5%. All right, they're committed to that, not only for the next meeting, but possibly the next few meetings. This is information that we already know. We've already known this. It's nothing new. Longer-term investors are already aware of it. This is why the dollar has been going so crazy. It's because we kind of already expected all of that, right? So nothing shocking. The path remains the same for the Fed. It is still my belief that if CPI does plateau or contract in the next release, that will probably get less 50 basis point hikes, and they'll actually kind of start easing off a little bit. But that's my rumor, right? That's not confirmed. It's just something that we're looking at. And then kind of looking forward on the week, tomorrow, 8:30 a.m., guys, we have GDP. And we kind of talked about this. Does anybody remember what happens if this comes out as forecasted? Right, let's see if anybody in the chat knows. I'll give you guys a second. Right, what happens tomorrow if GDP, right, for the second time in a row? Because remember, it came out negative 1.4% last time. They actually changed the forecast on Sunday. This was also supposed to be negative 1.4. It looks like they're forecasting it to be a little bit better. It's all kind of relative. All right, let's see what we got in the chats. Johnny said textbook recession, right? That's exactly right? Textbook recession. So if this does come out, again, negative, highly expected to, you can see it's forecasting to. I've talked about how I think it'll actually be a little worse. That's actually what I would prefer to see from a technical fundamental standpoint. Right, weakness. Weakness is correct. You should technically see some weakness on the USD side. Specifically in indices and stuff like that, but the textbook answer is that we will actually be in an actual recession, right, as they define it, which is two GDP quarters back to back that are negative. So that's what we're looking at. We're looking at, again, finally hitting that textbook recession point, and I think this is actually going to produce some really good swing trades. Hello from LA. What's going on, Bitcoin Mommy? How are you? Good to see you in the chats. Thank you for joining the stream. So we're kind of looking forward to this, right? This is like your last big market mover for the week, fundamentally anyway. There could obviously be, good momentum moves into Friday, right, off the continuation of some of the news this week. But tomorrow you could absolutely expect some volatility around this 8:30. This is also pre-stock open, right? So this is an hour before stocks open. So expect things like US 30, NASDAQ to be an extra little bit more volatile right at the open, pending what this looks like. So yeah, that's just kind of the week reviewed in news. And let's take a look at some charts. Let's get this off of here. So I do want to start the same way we did the Sunday call, right? We'll start with indices. And then what we'll do is kind of give a few updates on this, and then we'll look for like maybe a scalp trade. I do want this call to be a little bit focused on looking for an opportunity. So if there are people in the chat that are prepared to take their own risk, follow on demo, whatever it may be, right? I'm not a financial advisor. I'm just showing you guys maybe a setup that I'm looking at for myself. Honestly, based off the price of GJ right now, I kind of already know I don't want to take it, but we'll take a look at it either way a little later. Um, Hopefully a little bit closer to 9. So let's get an update for US 30. Actually, before we do this, if you're in the chat and you are subscribed, right, and you have access to the chat, drop a 1 if you were on Sunday's call, right? Drop some 1s in the chat if you guys were on Sunday's call. If you're brand new and you have access to the chat, you guys could drop some 2s just to let me know you're new. But if you were here on Sunday or you've watched the Sunday video, which, by the way, if you want to, after this session, great replay to watch. A lot of good stuff in there. I actually give a lot of gems at the end of it on Bitcoin, which is going to be a future video that I do. Let's see what we got. We got a few ones. Johnny was on the call. Sean was on the call. Uriah is new, so welcome to you. We'll kind of get you updated. Let's see what else we got. All right, so we got a few people that were on Sunday's call. Beautiful, beautiful. Everybody, welcome back, right? So, a little bit of an update to the stuff that we were talking about on Sunday. On Sunday, we were discussing how I guess I gotta pay for more TradingView. Okay, how we had these equal lows on the NASDAQ, right? We kind of had this double bottom pattern, and we had this strong push to the downside, and we talked probably for a good 30 minutes, 45 minutes about how we believe this was what we call like a protected low. For my smart money traders, my white golf traders, my academy students, we know we call this a spring in terms of a longer term white golf range. Actually, we can include this too, because I know you guys are going to know that's the PSY, right? So we're kind of looking at protected price action, which basically means that we highly suspected that price was not going to move below this low. And we talked about a few different setups, how you can kind of just take any pullback into this area, run a trade with your stop loss below this low, and we highly expected that to hold, because if this broke, we were going to reassess. Our logic would be flawed at that point, so we'd have to kind of reassess it. And I kind of want to break down a few things here, because if you go back on that Sunday call, you'll actually know that we were trying a few different places to buy. You'll know that I was trying to rebuy at the Sunday open. Price had opened up on Sunday. It had actually opened and kind of immediately took off, so we kind of just take a look at where that happened, right here. Price kind of opened up, went down a little bit, but it ultimately just ran right out of the gate. And we talked about how if price kind of came back down into this zone, we would look for a buy. Well, we actually took those. If you follow me on Instagram, which is just @BuySkag, it's up on the screen somewhere, right above me. We talked about like these entries, and we actually got in these entries, right? We took these right against the 11,800 level. I have all the screenshots, right? The guys in the chat, the inner circle, you guys know we took this. And we held on to them, right? I didn't really partial out of them. Again, we were looking for that swing to the upside. We were just looking to play, very simple lower time frame demand zones. And we actually ended up getting broken even on this trade later in the week, which happens, right? Our logic when we're trying to play large time frame cycles, right? We're trading in demand. Our entries were based in logic. We had every reason to be in the trade down here. I'm not going to go over all the little things we were looking at on Sunday. You guys can go back and rewatch that for your own educational purposes. But we never broke the structure we were looking to break. We actually ended up opening up way down here on the gap, which was kind of crazy. And we also bought the gap. Right, with this gap down, we also bought. We got that little bit of a reaction on these. Again, we were break even. Eventually, the market just spilled over into the night and took us out. Now, why do we keep attempting in these demand zones, right? Like, you would think, you have 1, 2, and then we took a third entry, I believe, on these lows. We actually ended up waking up, played with inside this structure, and again, price moved in our direction, and eventually we got break evened. So that's 3 trades that we took from Sunday into, which was like Tuesday night, all of which produced nothing, right? All of which produced nothing, right? This first one actually produced decent profits, but we didn't manage it that way. I didn't manage it that way. Some people might have taken some profits off, or that's on their own terms. That's not based off what I said, though. And we took these 3 break evens. And honestly, at this point, I was getting kind of annoyed with the market. I'm gonna just be real with you. I was getting kind of annoyed. I was like, man, listen, everybody, no matter how experienced you are, everybody's gonna kind of get to a point where it's like, damn, like we could have just took profits on this. We could have wrote it back down. Like you start thinking of like all the little things you kind of should have done right throughout the session. So when we started breaking down here, I got so annoyed with the fact that we just kept breaking even that I was like, you know what? I'm gonna listen to my own advice that I said on Sunday. I'm gonna just throw an entry out there. I literally, when I tell you, I even told my students, I was like, listen, I'm being emotional right now. I'm so fed up with this. I'm gonna just drop an entry. I'm gonna run my stop loss below the low, which I know is protected price action. So if we break that, all right, this whole idea is trash. And I actually ended up entering that, and then I kind of sat back all of like 30 minutes later as price kind of moved down into another zone we talked about on Sunday, which was this kind of 15-minute order block area. Right, we were looking at this candle, and I had said on Sunday, you can go back, right? I wasn't that confident in this level. I said if we come back down here, I might have to reassess and kind of just relook at the market, right? So at this point, I looked at this and I was like, you know what? The effort down here is pretty significant. We're not breaking structure. If we're gonna hold, we're gonna hold here. And we actually ended up taking the entry. There's probably a few people in the chat, or I think there's a few people in the chat that are maybe still holding down here with me. I mean, you guys should be, if you are in the inner circle, right? Some people, may have, mismanaged their trades. I know that happened to, one or two. But we were in from this level, and then eventually when this kind of came up, I closed my emotional trade, right? I got out of this little thing that I kind of just dropped out of emotions. It actually ended up breaking even. Price moved up. I was like, all right, I'm not taking a loss on this terrible entry. I'll hold my better entries, and we swung that. And these are trades we're still in, right? We're still in from 11,580 areas, right? But it took what was the fourth, technically even the fifth, if you're going to count the emotional entry, right, on this trade, on the overall bias. And that doesn't mean that, again, that attempts in this area were bad, because following the logic that we teach, that I teach in the academy, right, there were entries in here, right? Logically, there were entries. I mean, we got everything we wanted from the wick fill here to the lower time frame structure. Everything was key, but the market wasn't quite ready. And you're going to have that time and time again. You're going to see examples of that where, we talk on Sunday about all the different possibilities that could happen. And then in a real market environment, right, you execute and then you make adjustments, right? You manage that trade based off what it's giving you. That's why we didn't take any losses. We didn't take a loss here. We didn't take a loss here. We didn't take a loss here, because we knew to manage the trades. We knew that when it pushes up into supply, we should go break even. There were no clear signs of break of structure. Yes, the entries had everything we needed, but the follow-throughs just were not there. So again, started as a pretty sloppy week, but we got to the point where we, took trades based in logic. And now on these trades, I mean, what's this paying out as? A 1 to 8, right? A 1 to 8. So even if we lost these three, if I took L's on all three of those, this one trade is instantly paying us back. And then we actually caught re-entries this morning. So NASDAQ, again, pulled down into an area of demand that we were looking at. A few things happened on the lower time frame that we enjoyed, and now we're holding secondary positions, right? So we have two great structure entries. Still looking at the whole 4-hour analysis, right? We expect price to break back out above here, right? So all of our trades that we're looking at are, 1 to 21, 1 to 22. We have trades that are going to, again, hopefully pay out like that. Now, we don't care what happens here because we've already partialed out, right? We took partials here, re-entered, took partials here, and we just hold it break even, with, for me, is like, I mean, I only partialed out of these 30%. So took 30% off this, took 30% off this. I'm holding 70% of my original, holding 70% of my original. And if it comes and it takes us out, that's fine, because we've already managed the money. I already gave myself a little something. And I'm still going to end the week positive because I took no losses. Imbalance at 11,544. Are you talking about a fresh imbalance? Are you talking about this imbalance? Oh, no, it's 748. 544. 544. You must be looking at like a lower time frame candle. Yeah, I don't see where you see imbalance. I mean, yeah, there's no imbalance down here. All of this has been mitigated. Everything's been mitigated on this. This should not come back down to recapture anything. Yeah, all of this has been mitigated. There's no imbalance here. There was maybe previously. You could have said that like this was capturing all of that imbalance, and we did talk about that on Sunday. Oh, roughly. Yeah, I know I know. I gotta work on getting the stream in 1080p. What's up, bro? What's that volume indicate? This is just volume. This is just plain old volume. Nothing fancy. That's all you need. You don't need anything crazy. Actually, Bitcoin Mommy, now that you're on here, let me break something down for you guys real quick. She actually asked a question on one of my boys' streams on Abel Melendez's stream, which, by the way, he goes live in an hour. I highly urge you guys to tune into that as well if you're not already subscribed to him. But she was asking what I think was an indicator that's a paid indicator, right? If you come up here to the volume profile, I believe you were asking, correct me if I'm wrong, you were talking about like the session volume profiles, right? The fixed range volumes. If this is what you were talking about, there actually is a way to use this stuff for free. These volume profiles are actually really amazing. They show you where the most buying and selling activity happens in a specific range or session. Now, these are premium indicators, meaning you have to have TradingView Pro to use them. I'm pretty sure this is what she was asking about on Able's stream, but if you want to use those for free, they actually have a tool. Where is it? I know it's here somewhere. Yeah, right here, fixed range volume profile. Here, I'm gonna actually add it to my favorites. Right, you could use this tool, and you can use this on an area, a price area. Now, again, I don't think this tool is fully necessary, but if you're new to volume, it could definitely help. My people that know about smart money concepts and order blocks and areas of imbalances, you probably don't need this, but what you can do is you just take this and you click and drag it over a period of time. And what it will do is show you where the most buying activity in that range happened. And if you look where the red line is, that's right, that's the price point that the most buying activity happened. And if you just take a look at where price kind of came down to, right into those high volume areas, and that's where it reversed from. Now we already see the order block structure, right? We already see the POI candles, you already see all the imbalance that needs to get mitigated. So do you need this? No. Is it cool? Yeah, absolutely. And as you drag this range out, right, it'll give you more or less data. Right, so if I take this and I can't even grab it, and I drag this out, right, it'll change. Oh, see that the main buying activity is just down there. But see, if I give it more data, it will tell me in that area where the most buying or selling activity happens. So this could be useful, again, if you're measuring a range, if you want to know in a range where the most activity is happening, you can get that. And then as you can see, as you play up into this area, there's a lot of, it acts like an area of supply and demand, because that's literally what it is. It's literally what it is. Yeah, so that's a cool little tool you can use for free. The indicator, if you have it, you can do right here. You can do session volume. The thing that I don't like about the indicator is it's always there. It's always there and it's everywhere. So as you kind of move around, the indicator is just like on the screen. It blocks out price a lot. It's something that I would turn like on and off as you need it. I wouldn't just always have it on my chart. Like find out where the volume is, mark it with a line, and then turn it off. But yeah, you definitely don't have to pay for that. But yeah, it was a good question in Abel's stream that I did want to had a buy limit on NAS at 11,637, filled me in, so now opportunity. Oh, you saw the opportunity. Oh, good shit, bro. That's what I like to hear. I mean, you also have access, bro. So, you more or less knew we were like you got the levels. You got the direct access to the levels. But yeah, so that's the volume indicator, guys. This is still what we're looking on NAS, right? I'll just be honest with you guys. We're looking. I'm bullish. I'm telling you, until this low breaks. Now, keep in mind that obviously we're creating bullish order flow, right? Higher low, higher low, higher low, steady high, what's going to probably be a future steady high. Once we break out of this, we're very much extremely bullish, except the difference is that I'll be bullish, but I won't be entering the market because I'll have no need, right? Because I'm already in the market. By the time most people get in this, right, by the time this actually pops up and everybody does their little like break and retests, which probably get liquidated, and then we continue higher, right, by the time everybody sees that and begins getting long, I'm already going to be sitting in my trade at a 1 to 17, which on these, which is like about a 0.5% risk, this is going to be returning me so I'm at 0.5% risk. I already took 30% off the table, so 30% minus whatever that is. Yeah, I'll be up like 12% at this point. All right, floating. give or take. That's just really quick math. But I'll be above 10% gains on a 0.5% risk by the time most people are even looking to go long. And that's just because, again, because of the cycle analysis, the supply and demand, we typically get, the better risk to reward than the trader that actually waits for breakout retest. And it's a little bit more advanced trading. If you're new to trading, that's okay. Hang out in our streams, watch the videos on the channel, hop in the inner circle, get the academy, whatever you need to do, right? Whatever level of help and, information you need. Same thing for US 30, SPX. I'm not going to look at these. These are the same thing. They look a little bit different, but look, SPX, same structure. All right, took out the lows. All right, bullish order flow. Right, retesting areas of demand. Right, this is actually already breaking structure. These look a little stronger. That's even greater. NASDAQ is the tech, so it's a little weaker. Things like Snapchat, whatnot, not doing so hot. Let's see, any questions in the chat? No, all right, we're good. Let's see. Let's give a little update on gold. Gold is another one we talked about. If you go back on Sunday's call, there were a few things that we talked about on gold, and it actually gave us two different opportunities from the same kind of like analysis and logic. Unfortunately, and my people already know what I'm going to say, this is one that we caught, we partialed out on, and then it produced these re-entries, and we missed them, and now we are very sad. Very sad people in the inner circle because we missed this. But just to give you guys a little recap, let me just delete the lower time frame noise. I'll re-show you guys that. On Sunday, we talked about how price was pushing up here after forming what we call a reaccumulation cycle here, which basically just means that the market was readjusting supply and demand in the favor of buys. And we kind of talked about how it kept pushing up, right? How it kept pushing up in this area, but how the volume here was critically low, right? We talk about volume from an effort standpoint, right? This is how much effort is behind the move, how much conviction, how much confidence is behind those entities, those institutions, that smart money, those market makers, whatever you want to call it, right? What the intentions of them are behind the effort. And we saw that it was moving up on lower effort, and what that signified to us is that short opportunities could be in the market. It's okay, you got it. Sanju, give me a second. I will talk about that in a second. Let me just get through gold, and then I definitely got you. Victor, I will maybe touch on that, bro. That's not really what I'm on here to talk about, but if you want me to entertain the little bit of drama with that, I'll maybe do it towards the end. But let's just talk about this. So we talked about how we were expecting price to kind of push above these highs, possibly even these highs, and just kind of up into this supply area. And if you go back on Sunday's call, literally what I told you is as we push up into here, what I'm going to look for is lower time frame structure in this area for reasons to sell. And I very specifically said that I was looking for like a 1 hour, 2 hour, or 4 hour order block structure to form on this lower effort, right? The lower effort was the key. Without the lower effort, the order blocks will never produce anything. All right, so we had the lower effort. All right, find the time frame down, right? We ended up waking up, and I woke up to this, right? I woke up to this structure here. Right, this is before this candle broke out to the downside, right? We were still sitting up here, right? So all we really had was everything up in this area, right? Never broke down yet. And what we saw, again, look at the effort. The effort is significantly lower. I'm gonna just highlight this, right, for everybody that's new, right? This volume, which is associated with this high, this volume, which is associated with this candle, this volume that's associated with this candle, right? What does this tell you? That the people up here, yes, they're buying it, yes, they're bringing it higher, but no, they're not as convicted, they're not as strong, right? They're not putting as much money behind that move. And when you see this price action to volume divergence, it can really set you up for potential, easy pullbacks. Combine that with very basic smart money concepts, right? You have this order block here, or you have the engulfing candle that is overtaking the supply or the demand of this candle, right? So you have that structure here. You have a candle that perfectly tests up into it. You also have this candle that perfectly tested up into it. Now you may ask, okay, well this actually pushed up past the order block, and I would tell you, yeah, it did. But if you break this time frame down even further, right? If you break this, actually, I think you have to go to like the 5-minute to really see it. But the point is that it just created further sell structure up here. Right, again, it just played right up into lower 5-minute action. And at this point, again, I woke up and I looked at this, and we were sitting here. So at this point, I'm looking at this market, and I was like, all right, cool. So on the 1 hour, right, we have exactly what we wanted to see. A push up into the supply. Where are we? Push up into the supply, order block formation, 5-minute retest of the 5-minute order block. We're like, you know what? We're taking ourselves on this. So again, I got in the trade, beautiful trade. We went short like somewhere in this candle, stop loss right above the high. And I'll be honest with you guys, we were looking for it to topple over down into 1830s, right? We talked about this wick. I wanted to see this wick liquidated. And what actually ended up happening is, you know, got a nice move down. I mean, this is about 140 pip. By all means, beautiful move, right? This moved 130 pips in our direction. It actually came back up here on the lower time frame. We actually took another entry. Some people that missed the morning entry actually entered in this area up here. And then we, again, took that to the downside. Now, when it pushed back down, some of us partialed out, right? We started to take our profits because, again, we're pushing liquidity. We know that retests up here are likely, right? So some people closed out half, some people closed out 30%, right? Depending on their money management rules. For me, I closed out 30%. Market comes back, stops us out as break even, right? Now, we're not complaining about that. We love that. That's great. We followed our rules, right? Price came down, broke structure, right? That gives us a reason to take profits, took some off the table. We want to hold more because we want to, again, look for those opportunities where we can let our trades pay, and it just didn't work out, which is fine. We don't argue that. That's literally happens to me all week, every week, right? If I have any week where I don't have 3, 4, 5, 10 break evens, then I'm not doing my job. Right? We execute, right? We do more execution. I mean, we do a lot of analysis, but right, we don't get lost in the analysis, right? We like to execute. We like to take stuff when we see it. Long story short, price comes back up into our zone. I'm not going to teach on this right now, but this is a reversal pattern that we do discuss and teach. I don't even have a video on it for Academy students. It's kind of just been screenshots and explanations, but this 4-candle pattern is a reversal pattern that I like to play. I had actually let everybody know that I was going to short this again here, and I did with stop loss at 1670. Now the downside is I actually closed this with a 15 pip loss because I wanted to re-enter and wait for a little higher of a pullback. Like I closed it when it was down here. I wanted to just re-short it up here to better entry, and I never got back in, right? I ended up getting busy with life, and price kind of just fell on us, right? It eventually, like when it broke this structure, I noticed it and I was like, damn, like we just missed our entry. And it, you know, I could have held mine. There was no reason for me to close my trade, right? I was risk managed to 1670. There was no reason to close. And price spilled over, and now we're kind of just on the sidelines, like, you know, that premium pricing is gone. Now, a lot of people probably looking at this like, oh, why didn't you just sell this pullback? Yeah, you could have, right? You could have. And if it would have pulled back deeper into some of the structure, I probably would have entertained it. But at this point, like the risk to reward for me on this is it's just less. It's just not. I mean, this is still paying as a 1 to 2, and if you look for our targets down here, this is still a 1 to 3.59. But if you compare that to like some of the entries that you could have got up here, you know, it's a 1 to 3.5 versus what we were looking at was like a 1 to 10. So you're talking about a 300% additional return that we're missing out on just because we missed our entry. So again, like you would think like, oh, it doesn't matter, but it does, right? I'd rather deploy that equity somewhere else where I can, again, look for that, you know, easy 1 to 3, easy 1 to 5 to partial out, but overall looking for a 1 to 10, 1 to 15, 1 to 20 risk to reward. That's how we stay profitable, right? We win in the money management side. We can look at GBP AUD, yeah, absolutely. I mean, we're gonna look. So it's 907. We're probably going to let the first 15-minute candle play out here, the 9 o'clock hour, and then we're going to look for some scalps. So GBP AUD we'll definitely put on there. Now, as far as gold now, I mean, we're still going to trade this to the downside. I'm hoping GDP pushes us into this liquidity, possibly even wipe this wick so I can start buying. But truth be told, I'm looking for reasons to kind of go long again. I would love to get below this wick. That's still my idea. You guys know from Sunday, the only reason I was looking for this wick to liquidate was so I could actually buy it. So the short idea was kind of just, you know, me counter a trend, me just aware of opportunities. But I do believe this will actually break out back up to like 1930. But we'll save that for a Sunday, because right now it's not prime for that. GJ is the last one we have to go over. Guys, GJ is just very simple. I'll tell you what. Just go back, look at the Sunday call. We tried to go short in this area. We literally shorted it here. We took like a 15 pip, 20 pip loss on this. It is what it is. We also talked about the 161 level, right? The same kind of idea. Again, this is something that Abel was also talking about. Yeah, we missed the trade. I missed the trade anyway. Beautiful, fell in the PMI. There's nothing to talk about here. Mostly because I'm so mad about missing it at 161 that I don't even want to go over it. Do I ever use limits or using market execution? So I do not use limits. Listen, limit orders can be great. My smart money concept traders, my white golf traders, yeah, like I get why you would use a limit. My thing is especially with order blocks, right? Especially recently, because there's so many people on YouTube and all over teaching smart money concepts and stuff like that. But what they don't show you is that there's a lot of order blocks that actually get liquidated, right? There's a lot of order blocks that, like, if you run the stop loss right below the candle, a lot of times, and even like if you look at what we looked at like on NASDAQ, like the candle got ran on. It did, right? It doesn't mean that it's invalid, right? They teach that, oh, if it breaks, it's over, it's doomed. That's not the truth, right? Those areas are very liquid. They're gonna slip the block sometimes. So I don't use limit orders for that reason. I also like to live manage my trade. If you go through my academy, we use something called a live order block, meaning that we're actually trading the formations of order blocks in a live scenario. I prefer that. Listen, I have my time freedom. I don't have a job. This is what I do full time. It's what I've been doing now for 3 years full time, trading for 7. So for me, like, it's not a and like, listen, I don't work. I'm single. I don't have kids. Right, I have the time. I have too much time, to be real with you guys. Like, a lot of you, like, I tip my hat to you. Like, people like Abel, if you have kids, you have families, like, it's crazy. You have so much more responsibility on top of trading. I don't have that. So I have the luxury. I won't even really call it a luxury, because honestly, it's more of a curse. Right? I have the curse of all this time where I can sit there and I can execute live, right? I can be at the charts for 5 hours, right? I usually sit, like, I'll be honest with you, I'll tell you guys, like, some people will tell you, like, oh man, you gotta be locked in the charts, you gotta be this, that. Like, nah, man, like, I set a bunch of alerts. I sit here on my phone, I play like Apex Legends on mobile, I play some other game, but I keep my, like, listen, I'm market executing. I have no need for limits. Limits are cool for people that are busy, right, and you have stuff to do. Yeah, like, you need to get your strategy down for limits, because I understand that's the type of lifestyle you have. But for me, it's just, like, I have my 10,000 hours on the charts, put it that way. I have like 20, near 20,000. Am I familiar with Zoe and his style of trading? I used to watch you and him. I am familiar with Zoe. Listen, I'll be real with you guys. I don't tap into other traders. When you guys see me on Abel's live stream, like, I'm there to support. And me and him trade very similar, but I'll be real with you guys. I don't care for other traders' opinions, their styles. Like, I'll listen to everything, I'll absorb everything, but typically, like, I'm at the point where I have my clear-cut stuff. I know he trades similar, you know, a lot of people do, but yeah. All right, so let's look at. So I want to look at like G. Yeah, C. I'm so mad because I knew this was gonna fall. All right, so let's look at some scalps, right? Let's look at some stuff possibly in the market. This GJ is actually looking really good. Let me just go zoom out to the 1 hour. Yeah, this pushed a lot higher than I thought it was. I was looking at it to liquidate this candle, but we just came up and we just grabbed a lot of liquidity. So Again, the first thing we're going to do is just kind of check the effort behind the move, right? So if I just come to the lower time frames, if I do quick like cycle analysis on this, like we obviously have a markup phase, right? That's obvious because price has already moved up. We have an ascending accumulation, and then you have a breakout of that accumulation where your effort here is beginning to lack in comparison to all previous effort, right? So this move is more than likely going to erase very easily. That doesn't mean that it's not going to just bounce from here and return to the highs. It can certainly do that, but this move is going to erase very easily. It might have even already put in its high. There's no clear live forming. I mean, you can kind of say it's forming an order block right now, I guess, but there is no clear like 5-minute OB to kind of come up and replay. I would hate to just short against this candle. I'll tell you what I would look for on this if I was going to play this as a high, because you wiped multiple liquidity. Your buying volume is really not that high. My only concern is I would like to see if it, so not to enter, I don't need this to enter, but in order for me to hold this is like this sell volume has to begin to increase, right? As it moves down, it has to begin to increase. Otherwise, you're not going to be confident in the position. The only way I would play this is if we get like a retest back towards the open of this candle, though. So if you've taken my course, or if you haven't, I'm going to give you a little quick tip. There's something that I believe, it's a candle theory, right? It's so if I'm looking to short something, I want most candles to open against me, right? Or if I'm buying something, I want more candles to open against me, right? So for example, in this scenario here, right? If I was looking to short this, when this new candle opens in 45 seconds, the first thing I want to see that candle do for the first minute or two is come up. I want to see it immediately come up. I don't want to see it test down. I want to see it immediately come up. The logic there is that it opens against you and it closes away, meaning that it comes up here, it opens against us, and then begins to push away and close down. Now you can already see the momentum on this thing is just picking up, which is fine. So we'll see in 25 seconds here, if this candle opens up and it comes up, right, and begins to kind of fade off, we'll just take that sell, and we'll just run a stop at the high here. On the idea that it's going to continue and erase this kind of low volume in the broad spectrum of things, right? Because the volume here is seemingly high, but if we kind of just zoom out, you can see it gets lower, right? So that's what we'll look for. We'll see if it does come out in a second here. Again, we want to see this candle mostly push against us. We don't want to see it just immediately drop. If it does immediately drop, then we'll have to wait for a multi-candle kind of play out, and then we can play the next major pullback. Let's see how it's kind of opening up and it's going quote-unquote against us, right? See how it made no wick to the downside yet? That's what we mean when we say we want to see its kind of push against us so we can sell into that for that. Hopefully it does it here. I mean, it might. So typically you'd see like 1 candle, 2 candle, and then like 3 candle, 4 candle, 5 candle, and then you have that wick, and then you have the closure to the downside. That's what we'd want to see. If it doesn't give it to us, it's fine. Like I don't really care about throwing everybody into a risky position at 9:15 at night. We also have a 15-minute candle too, so typically we want to see the same thing, right? Once the 15 can move up and whatnot. So we'll let this play out. We'll see if it pulls back. If it pulls back up into this area, we might take it. I mean, this will be what, like a 20 pip risk, you know? It's something you throw like, this is like a trade you put like 0.2, 0.3% on. If you're risking 1%, 2%, 4%, 5% on something like this, you have no sense of money management and you need to get off my calls, because that's not how we trade, right? We do like 0.2, 0.3, 0.5%. If you take a 1% risk on a trade like this on a funded account, you're doomed. You're definitely doomed. All right, so what was that other question? What would be your lot size for NAS 100 on an $800 account, right? That's what St. Jude at. So let's talk about that, right? This is still pulling back. We're gonna watch. I have to keep this in sights. I have to keep this in sights. Our position on this is gonna look something like this, though. And then for you guys, I mean, I'm not gonna look to give you guys like a 1 to 10. Hopefully this is like, yeah, just get out at the lows. Get out at the lows or break even at the lows. I would like to see 160.67 though if you are gonna take this. All right, let's talk about the NASDAQ real quick. All right, so NAS 100 money management. money management, right, for an $800 account. So Sanju, what I'm gonna assume you're using 1 to 500 leverage. Right, I'm gonna assume. I'm not telling anybody to use the 1 to 500, but most people probably using this 1 to 500, right? Right in the chat though, for some reason you're not, because what I'm gonna show you, it actually matters what you're using, right? So, actually, everybody do me a favor, drop what leverage you use in the chat. I'm actually curious. How many people we got on the call? If we got 30 people on the call, drop if you guys have access to the chat and you're subbed. Drop in the chat what leverage you use. Curious what people say. 1 to 100. Are you using 1 to 100 personally, or are you funded? Because the funded accounts I know are 1 to 100. 1 to 400, 1 to 200, 1 to 500, 500 to 1. Okay. 1 to 200. 1 to 200 is probably the best you can use. Like if your broker offers up to 1 to 500 and you're blowing a lot of accounts, reduce it down to 1 to 200. There's really no reason for 1 to 500 unless you really know what you're doing. 1 to 100. You're funded? Okay, yeah. If you're funded, if most people that are saying 1 to 100, I'm going to assume you're funded, because most people, when they're offered up to 500 leverage, they don't pick 1 to 100. Most people are picking the max. Let's just be real. But if you are blowing accounts, guys, and like you're over leveraging a lot, drop it down to 1 to 200. Now, the reason I ask this is because for every trade you take, there's going to be a margin requirement, right? The amount of money that you have to put up to actually enter the trade. And on the NASDAQ, at 1 to 500, right, this is $60 per 0.01. Which means if you wanted a full margin the account, you could probably drop like a 0.10, 0.12. But then you don't have much room for error, right? Because you don't have any money to sustain the drawdown, right? So you have to kind of consider this, right? So right away, for every 0.01 you're dropping, you're using $60 out of that 800, which is going to affect how much you can, run a stop loss or even just manage your money. It's important because, again, if you're over leveraging and you're dropping like a 0.05, you're going to be using half of your equity right away just to enter the trade. That's not including the spread, not including any sort of drawdown you're going to issue, right? This is not money you lose, but it's money your account is using, right? So we have to kind of keep this in mind, right? So it's about $60 per 0.01. This number will change depending on the price of the NASDAQ. This never pulled back far enough for us, by the way, guys. You could still just take the idea if you want to. I wouldn't recommend you do that at all, but I can't stop you if you like what you like, right? Right. So now we have to also consider, right, what is the pip value, right? So the pip value, or I'm sorry, well, this is NASDAQ, so we're going to use the point value. And for those of you that don't know what a point is, it's every time NASDAQ moves what's more or less like $1, right? So when you're talking about from like 11,800 to 11,801, that's a point, or 10 pips. I'll be real with you, if you use pips on indices in front of me, I'm going to call you out. It's a rookie thing, it's an amateur thing, it's a marketing thing, it's stupid, it sounds dumb. Listen, if you want proof, just turn on Bloomberg, and when they're talking about the indexes, you let me know when they say the Dow Jones has dropped 25,000 pips. The day that I hear that on Bloomberg is the day I'll stop fighting this fight. But we want to look at how much each point is worth, right? So a point value, right, on a 0.01 is $1 per point. On most brokers, again, right, I can't say this is for every broker. Some contract sizes are different, but standard contract sizes on NAS 100 on 1 to 500 leverage for every 0.01 is $1 per point, right? So now you have an $800 account, minus 760. So you really have a $740 account, assuming that you drop a 0.01, right? Now, San Judy, if you're still in the chat, I haven't seen you in the chat, right? But if you're still in the chat, right, you have to ask yourself now, how much are you looking to risk per trade, right? Let's say you want to risk 1%. So that means you could risk about $7.40, which means you can run about a 7-point stop loss. Does the NASDAQ sound like it's something that you can trade with an $800 account based on this math? Probably not, right? Probably not. Where are you finding a 7-point setup on the NASDAQ? You're probably not, right? So you're probably not trading it. Now, again, I can't stop you. I've traded Nasdaq with $100 account, right? Very little room for failure. You're talking about you enter, you have 40 points max before you're full, getting margin called, potentially getting margin called, right? So typically, again, you can do whatever you want, but I'm just letting you know right now you're not really managing any sort of actual money on here appropriately, right? There's no way for you to be safe on this account. Now you can use a mini Nasdaq, which will actually cut this in tenths, which means you can multiply everything by 10, and that would be the same kind of math. But you can't on an $800 account. So what I would tell you is if you are gonna do this, understand that you're risking at least like 4, 5, 6% minimum for most setups on the Nasdaq. But if this is the type of math that you guys like can't do, or like maybe don't even understand how to do or aren't taught, I mean, this is all taught on like Baby Pip's kindergarten section. The problem is people read that, then they go learn a billion strategies, and they never come back to the money management. Um, but again, this is like simple math you can do, so you can kind of always ask, yourself, like, should I be trading this? Is it really worth the risk? And even like when we're looking at, look at look at GJ just drop. It's so annoying. But yeah, so to be honest with you, my educator answer to you is that you shouldn't be, or you should be trading the Nasdaq Mini, which in that case, every time you drop a 0.01 would be about 10 cents per point, right? A lot safer than $1 per point in your perspective. But if you were going to trade this, I would tell you, you very specifically have to look for setups on the NASDAQ that are probably 30, 40, 50 points or less, which is a decent move on NASDAQ. Let's be real. Just for perspective on this, right? Just for perspective, if we just look at what my risk was on some of these setups, my risk on NASDAQ here was 44 points, right? So you would have been risking 4.5% on that trade. This trade was a 40-point risk, right? So you can even see, even me that's trading in really tight ranges, really tight zones, really like lower time frame structure, you're still risking 4 or 5% of your account to trade these. Now I have people in my inner circle that trade with $1,000 accounts, $500 accounts, and they do trade the NASDAQ, but they know the risk they're taking. So as long as you know that and you're aware of that, listen, I can't tell you what to do, but I can point out to you that what you're doing is essentially over leveraging every time you trade the NASDAQ. Cool. Any other questions like that? Let me just roll back in the chat to see what else we missed. We will go over GBP AUD for you as well. It's probably following GJ if I had to be honest. You took this at 160.70, Lewis. Lewis just hopped in this. Was that on your own? That must have been on your own, bro. There's no way I gave you that. Is that what I get? Nah, there's no way. You would have had to heard me say that right away, Lewis. No, 78. Yeah, there's no way I gave this to you. That's what up, though, bro. Man, honestly, bro, you've been killing it. I'll be real with you, bro. You had a great day in the chat. So, like, listen, boys coming up. Don't sleep on them. Let's see what else we got in the chat real quick. And we were focused on money management. What's your thoughts on building small accounts like a... So my opinion about building small accounts. I love doing this. But let me tell you guys something real quick. If you can't be profitable on $1,000 account, if you can't listen, you got to be profitable somewhere before you can be profitable in these small accounts. The problem with these small accounts, these challenges, these flips, is you have to be insanely accurate on your first trade. Your first trade is so huge when you're trying to trade small accounts, because let's be real, we just did the math on NASDAQ, right? You cannot risk manage that appropriately. One bad trade and you are done. That being said, guys, you can do really amazing things when you have the skill set. And I'm gonna show you some stuff. I'm gonna show you some documented stuff that I've done. Listen, and I want you guys to know, I don't show you this to flex. Actually, let me just sign into this real quick. I don't do this to flex. I literally do this for my own fun, my own proof. This is like the stuff that I do to prove to myself the skills that I have. But I'll show you guys it's possible. You can do it. So listen, some people are gonna see the negative 99%, but understand there's some stuff that I did to the reason why this is negative 99%, right? But if you look, this is a small $150 balance deposit. I mean, this is all real, by the way. This is all it's not demo. But you can see the deposits, you can see the withdrawals, and you can do stuff like this. But I'm telling you, there's a few things that have to be in place in order to do this. One, market conditions. This was when oil was going crazy. Oil was a very low margin requirement pair, meaning you could actually drop decent lot sizes on oil with very little money, right? And I manipulated that, the volatility, and my skills, right? Keyword skills, because again, if I was off even by a little bit, this was done. And you can do flips like that, right? It's possible. But if you can't properly trade an account, if you can't pass a funded account, if you can't do stuff like that, doing stuff like this is just a dream. Like, you can't go into the market like this. This is not a real expectation. Like, I'm not even gonna tell you guys that you can even ever do this. I hope that you can. I hope that you supersede it. I hope you just blow this out of the water. Truly, I hope you do. But unless you really understand what you're doing, and you can already do it in accounts that are not degenerate like this, because let's be real, this was do or die. Like, that was the whole point of this, was to do or die on this. And again, it's for me, it's done at a fun. It's fun. It's just fun. It's fun to do. It's fun to see these percent gains. It's fun to get a 15,200% gain in a month. That's crazy to me. It's fun. This was like 3 days. It was a 3-day thing. So yeah, you can do it. Listen, I've seen people do amazing stuff. I've done amazing stuff, but it all comes down again to what's possible. And again, you guys are going to see the 100% drawdown. This is because the way that I did this is like, all right, so you flip this to like say $2,000, and then you take the entire balance out. And then if you take a loss and the account goes negative, like say your balance is 0 and then you take a $10 loss, well, yeah, you obviously lost 99% of the account because there's nothing in the account. So that's where these stats come from. I hate myself for even doing that because it skewed everything. Ultimately, the max drawdown on this, I think, was like 25%. And when it wasn't even on the initial balance, it was after I closed a bunch of stuff and got more degenerate on the NASDAQ and stuff. But yeah, you can do it. It's possible. Like, I have like other like stuff in. There's a $25 one I'm growing. Like, look, same idea, right? Low deposit accounts. Quick little flips in and out. Again, possible, not recommended. Don't suggest you try this unless, again, you have the skills. So, do I believe it's possible? Yeah, I've done it. It's it's all there for you to see. Do I use fibs? I do not use fibs. Yeah, I told you guys this was just gonna erase. It's just so annoying it didn't pull back, but if you guys are in it, cool. If you took it, awesome. Lewis, shout out to you, bro. Hopefully you're at break even. Hopefully, I don't know if you're trading a challenge account or not, but hopefully that pushes you over if it does. So no, I do not use traditional fibs. I do use Fibonacci extensions, which give you like potential target areas, but I don't use traditional fib retracements. Yeah, the $3 challenge. Yeah, the $3 challenge is is something I'm working on. Growing a $3 account. It's not easy. I recently just found my own strat and been super hyped to wake up for the charts. Found your own strategy. I mean, first off, shout out to you. I mean, every strategy you guys should adapt to your own, without a doubt. Did anybody just degenerately take this? Out of curiosity, I'm just curious if anybody did just degenerately take it. Let me go look at GBP AUD for Guy real quick. Ooh, the AUD is weak. The AUD is weak. Let's zoom out real quick. Okay, so this is all choppy nonsense right here. The AUD is that weak, really? It's not. Maybe that US dollar is not a good example. I'm gonna just check how the Australian dollar is doing against gold real quick. Yeah, she's not that weak. Why is this so weak? It's not pound strength, because pound strength... Dude, why would the yen be for? And is pound strength. Interesting. I mean, this is choppy. This looks a lot like a reaccumulation to me. This looks like it might, depending on how it reacts to these highs up here. The volume is so low, though. It makes me feel, I feel like this is like lagging behind GJ, to be quite honest with you. But because of the higher time frame structure and a little bit of that liquidity, I probably wouldn't want to short this just yet. I mean, honestly, like I would probably, if this pushes up into here, I would probably take this short, because a lot of the other pound pairs are actually finding some weakness right now. Yeah, that's crazy how this is so... What's going on inside of this wick? You could, I mean, nah, that's a little advanced of a play for you guys. Yeah, I would say, I mean, if it, I would prefer it to spike up here, just because there's so much 4-hour liquidity up into this area. That was a 2-hour chart I was looking at. And just because there's so much liquidity up here, I would love to play like a lower time frame shifter structure to the downside on this. But I also see a lot of absorption on the 4-hour. I would probably leave this alone, to be honest. I would look short, though, just because all the other pound pairs are trending that way. So, yeah, I would look at, like, 177.90. It's already kind of fading off. Yeah, there's no candle pattern that I would want to play there, though. Yeah, GA is interesting. I would look at 177.90, though. It all deals with smart money concept, but I have a clear vision on what I look for it now. Yeah, I mean, that's what, so smart money concepts, again, like, you have to add your own spin to it. Like, I'm a big volume trader. A lot of smart money concepts are based in old style Wyckoff logic. If you know anything about Wyckoff logic, you know that one of the 3 laws of the market is the law of effort. Volume showcases effort, so without volume, you can't follow one of the 3 laws, and if you can't follow one of the 3 laws, then what are you doing? So, yeah, you gotta add your own spin to. Not many other people use volume, I'll be honest with you. I'm about to change the game on YouTube. We're about to really have everybody using volume. Everybody's gonna become volume pros. Because trust me, it's all you need. Managed to catch it at 168.58. Or 160.58. I gotta get another monitor. Yeah, just be careful. Just don't let this turn into a loser. You know? Like, if it does come back up, like I would... Again, this might be very short-lived. Like, this might literally just come down, grab some liquidity below here, and just resume its bullish run. We were personally bullish GJ to 162.50, and I still think we get this 162.50 up here. So I would definitely be advised. Like, if it wanted to capture these equal lows, I believe it would have done it over here. So yeah, the fact that it couldn't even capture this liquidity on this move, and this was on decent sell effort, I think this 162.50 is still in play. Let's see, we got about 20 minutes that I can still stay on for before Abel hops on. There's a lot of liquidity on GA, but there's also a gap below. Yeah, so, I mean, the gap below... What are you talking about, this? So yeah, look at that though. But what's, I mean, that's nothing. What does that mean? That doesn't mean anything. That doesn't mean anything. There's the gap in the market. Imagine you were trying to trade this gap. All right, imagine ever since this inception, you were trying to trade this gap. Like, if you were just like in this entire range of trading that gap, like, you just, like, what are you doing? Like, you just, there's the market's just smacking you silly the entire time. You just, this doesn't mean anything. It doesn't mean anything. It can act as a point of interest if you have, like, momentum to the downside, but that's all it is. It's not... Gaps don't have to close. It's a way common misconception. Some gaps stay open for a very long time. Also doing a 20 USD challenge, only trading gold. The margin for error is thin and spread on... Yeah, exactly. Psychology is important. It's growing. To be filled, yeah, but it doesn't have to be. It doesn't have to be filled though. That's my point, right? Like there are plenty of gaps that have existed in the market for months, years, and they don't get filled. EU took like 7 years to fill a gap. UJ had like an 8-year gap. You know, I'm not saying this is gonna be like a multi-year gap, but just trading to the sell side because there is a gap is dangerous. You don't if you don't have any logical reason for this to be a distribution to play down into a markdown, this gap means shit, absolute shit. That's just again like there are gap traders, but again, look, if you were a gap trader, you've been what, wasting 16 days looking for that, like 60, you wasted 2 weeks. And every single time you couldn't even break a low. You just couldn't even break the low. So be careful with that logic. Be careful with that logic. It's very dangerous logic. Oh yeah, no, be aware of it, but at some point you gotta ask yourself too, like, is this relevant to this range? And it just isn't. Like, if it was like maybe closer to the range, yeah. I mean, it's good awareness. Don't get me wrong. Like, I would mark it out on my chart too, like as an area of interest, but I wouldn't make trading decisions based off of it. That's for sure. All right. Any other pairs? Up to you guys. Any other pairs? Throw me a pair. We got about 15 minutes here. And if you guys have got any value, if you haven't enjoyed the stream, you know, feel free to throw a like on the video. It does definitely help us out, get this out to more people. Play some cool little animations for y'all. Y'all just like, subscribe, hit that bell. Again, only if you guys got value. I'm not out here begging. My people are on here supporting either way, and I appreciate y'all. But I definitely do this for you guys. SPX, we kind of talked about SPX already. It's the same as NASDAQ, my man, but I'll quickly go over it for you. Right, so on SPX, you have a few things smart money-wise, right? You have equal lows. You have what we talked about being a spring down here, which is a low-effort sell-off, right? That immediately closed back in the range. And then we, again, have this bullish order flow. All right, no significant buying volume yet, but as we push these highs, we do expect the buying volume to increase. And we're going to play this SPX out probably up into all of this inefficiency up here. Basically finally squeezing out all these people that have been short the market at what are, you know, pretty bad levels to be shorting from. Yeah, you know, these people, they made out very well, but if they didn't close, they're going to quickly get squeezed out, which is only going to induce more buying up into like the 4,200 areas. So we're pretty bullish on all indices. I specifically only trade the NASDAQ though. I think it's just that sweet spot. I think it just moves. I mean, the accumulation on this is also more clear to me on the NASDAQ than it is SPX and US 30. Not that they're not clear, but this is like more textbook, so to speak, so it's easier as a case study, right? So like this is like the same kind of path. We're expecting all of those to follow. SCAG USD, well that's just bullish. There's no pullback, straight up. We can look at CAD JPY. All right, so let's look at CAD JPY. Let's look at the daily real quick. All right, so like most yen pairs, right? Like most yen pairs, you have crazy markups. This went through a little bit different of a distribution than USD JPY did. If you don't know about the distribution that I marked out on USD JPY, you guys can... Are you guys still with me? Oh no. Oh, I think we lost connection. We lost Wi-Fi? We might have lost Wi-Fi. Yeah, 777 in the chat if you guys are still with me. 7's in the chat if you're still with me. Let me see. 7's in the chat if you guys can hear me and see me still. I don't know what that, a little bit of a lag spike. We got some 7's, let's see. Alright, cool. Alright, thank you. For some reason, all my tabs just refreshed, so I was like, I think we're not live no more. Alright. But yeah, so we were looking at distribution on USD JPY. There's a video public on my channel you guys can go check out that'll actually break down the exact things we saw to know that USD JPY was going to fall all the way back when we had CPI, right? We were basically, we called this sells on UJ, more or less around this area here, and they've been working very well, right? So CAD JAPY is the same kind of idea. Structure looks a little bit different, nothing too crazy. If we do kind of look into this, we do still kind of expect further downside. CAD JPY is kind of lagging. It really hasn't broken any of the kind of major structure yet, so maybe this acts as an area of interest for us to kind of keep moving down. If we go to the 4 hour, we did have some interesting demand come off of this level here, which again for our smart money traders is an area of interest in terms of like order blocks and so forth. You know, this is like an early range one, so we do expect this to kind of get wiped. But what we can do is begin looking at some of the volume associated with this, right? So if we kind of just look at the volume associated on the down moves here, and we can kind of see this is beginning to lose its steam, but at the same time, it's not really picking up any steam either, right? So when we kind of have both sides just kind of dwindling down, we do expect a change to come in the market, but it's just far too early before we can start betting to the upside fully. GJ looks a little bit different, but GJ still has like lower levels that you can visit as well. So if I was looking at this, all right, depending on the bias that you want to try to force, you might be able to get a nice little reaction off of here. You'd be kind of hoping that, you know, bullish order flow continues, right? Kind of like what we have on the NASDAQ, where you have the higher low, higher low, higher low into, you know, the same supply, and then we kind of, you know, eventually do something like this where we kind of break out to the upside. So I would look at this 98.50 area. Now, obviously, you're going to want to continue to refine this. You're going to obviously want to drop this down to a 1 hour. When you look at the 1 hour, right, this zone doesn't actually look as strong as it did, right? When you look at this on the 1 hour, there's actually a lot of inefficiency that's in this market, right? Untested price action areas. There's no clear order block here or here on the 1 hour, so maybe this demand is actually not sustainable. We actually see ourselves playing off some old supply, right? So we'll just refine this down a little bit more, see if there's any actual buying activity happening in here. Again, just refining some of these supply areas. Okay, that's untested. Yeah, so the path I see for this is it's probably going to come down. You're probably going to get a reaction off this, but I think it's going to be short-lived and still come down and capture all of this. So I'd probably remain on the sell side for these yen pairs. I'd probably remain sell side on this down to the 96.90 area. I probably wouldn't want to chase this sell, much like I wouldn't want to chase GJ. Yeah, you'd have to, at this point, you're gonna have to wait for it to give you that conviction of this not holding. But I would continue to trade this to the downside, that's for sure. Let's see what else we got. Bitcoin, GJ. Wait, GJ we went over. You just hyped because it's falling? Yeah, we really could have took that. That would have been an easy 40 pips to everybody's face with like no drawdown. But again, see how easy that is to call because we see the lack of effort. Like that's all. Like literally, it took no time on analysis with that, right? Literally just a very simple liquidity sweep on low volume. It sells all day. Scalp sells all day, right? That's not, you know, maybe that may not be the swing entry. Maybe we come back up and grab this liquidity again during London, right? That's besides the point, though. The scalp trade was there. Are you taking swings or intraday setups? Personally, used to be an intraday, but those swing trades. So it depends. It depends, right? I want everybody to drop in the chat real quick. We'll end it off with a little bit of tips on just this. But drop what kind of trader you are in the chat, right? Are you a swing trader? Are you a scalp trader? You intraday? You an everything trader? Right? We call those like a setup trader. What do you consider yourself? Right? What do you label yourself? Right? What's your label? Everybody likes to label themselves. All right, what's your trader label? Drop that in the chat for me, family. Victor says he's intraday. Iria says breakout trader. Scalp is the best that you can do. I'm gonna call you out on that. I don't think that's the best you can do. Unless what you're saying is like you just don't have the patience for anything else, which is fine. That's perfect awareness. Setup trader, setup trader. Yeah, I'm also a setup trader, family. Listen, like to me it doesn't matter. The chart to me dictates how long I hold a trade. If the setup is on a 15-minute, I'm looking intraday. If the setup's on a 4-hour, I'm looking intra-week, maybe even multi-week. If the setup's on the daily or the weekly, I'm holding multi-week. You know? That being said, I will try to hold every trade as a swing trade, right? I have very specific money management protocols that I follow. Right, I'm very specific. We have the scale out strategy. Again, this is all stuff that's either currently in the course or being added to the course as I add through it. But when we talk about like money management, like when a trade is paying me out 1 to 3, 1 to 5, I take 30% of the profit right off and then I let it ride. Right now, if the trade just absolutely was meant to be short term, yeah, I'll take 80% of it. I'm always leaving something. I'm never closing full positions ever. There's just I'm either gonna adjust my stop loss to a structure point and it's gonna come back and it's gonna take me out, or it's gonna continue and I'm gonna keep adjusting that based on whatever structure of the cycle I'm following. I'm never gonna close out something 100%. Right, so I'm a setup trader, right? Because it's not up to you. The market's gonna create cycles. It's gonna create new footprints. Areas that you think price is going to reverse from, we know as smart money traders and cycle traders that just because an area is hit of supply doesn't mean it's a sell, right? We have to look at that smaller time frame cycle to identify whether it's doing a reaccumulation or a new distribution cycle, and then we monitor based off of that. So for me, this is like I don't have an identity as a trader. Everything is different. I have trades that I take and we're just in and out of the market, and I have trades where I still have a trade open on gold from all the way up here. I'm still short on gold from 1990. This trade has been open for like 42 days. I mean, this is not even that long. I've held a trade for like 8 months. It's the longest I've held like an actual MT4 trade was like 8 months. This is not even that long. It's a 42-day hold. I mean, we're gonna approach 2 months on this, but it's a long-term swing. I have 20% of my position open from up here. Just multi-week. Like, what reason after gold dropped and like started breaking structure did I have a reason to close this out? Look, no reason to close it out. Dropped further, right? Pulled back, closed low, right? Pulled back, closed low, right? Broke structure. Like, where am I closing? I have no reason to close this. Like, yeah, and I'm also inherently like bullish gold and I'm buying gold, but like this account, like I'm not even logged in on this account anymore. It's just sitting in my back office, just like it's gonna do whatever. And that's because the analysis for that trade was done on a weekly time frame. You can go back in the Inner Circle Discord, you could look under the gold section and you could see the weekly analysis that we did that was based off the war, right? Off the fact that we didn't break this. Like, everybody was so bullish gold, like, oh, there's a war going on, and like, yeah, these equal highs will probably eventually get taken, but not before these equal lows. Right? Not in my opinion. Right? I'm still looking for like 1600, 1500. I'm looking for gold to fall all the way back down here on the back of the Fed raising rates, the recession, the depression that we're going into. So I got no reason to close that. Right? Does that make me a swing trader? Yeah. But there's also trades I'm taking that are 15 minutes, 20 minutes, an hour long. Right? You guys have to learn to adapt. That's the way you got to do it. So hopefully somebody gets a little bit of setup value from that. Opportunity trader, if it's a scalp, I take it. Yeah, so if higher time, exactly, right? Exactly what Lewis said. Like, that's how we manage positions, right? I don't play these other little games that traders play where you have to. I did that for years. It doesn't work. Just gotta manage it smart. Scalper / intraday. I'll be real with you. Like, my scalp entries be lit. Like, if we scalped a lot of my trades that do get hit at break even, they'd be amazing. I have some students, they literally take my long-term entries and they just scalp them. Because they know, again, I traded a 30%, 45% success rate. So they know, even though I got this lit entry now, probably by tomorrow, I'm probably re-entering the market off a different level, So some people just scout my stuff. Can I go in depth on why people are switching from IM to Real Rise? I'm gonna give this like 2 minutes because there's people on this call that probably don't even know what any of this is, and honestly, I'm not affiliated with any company, and I don't really care. Why are people doing it? Because people are greedy. They think if they get into a trading MLM first, then all the people that join after are gonna get piled under them, and they're gonna become these big executive people that earn 25K, 50K a month. I don't know, bro. Who cares? Who cares? Honestly, companies are lame, bro. I still say this publicly, bro. Any educator, any executive in Real Rise that wants to, see who's better at trading, I'm right here. Let's have some fun. Like, hey, I love this shit, bro. I do this shit all the time. I hope somebody smacks me right down. Quite honest with you, that'd be amazing. But, bro, don't just pay no attention to all that stuff, bro. To be real, like, yeah, I used to roll with them, and like, I used to be in IM. A lot of my friends are educators. A lot of my friends are chairmen. I know a lot of people in that industry. It's nothing but respect for a lot of them, but there's also a lot of people that are they're just money hungry, team hoppers, they're builders, they don't do like this is what I do. I love charts. There could be no company, bro, and I'd be right here with y'all giving value and doing that's exactly what I'm doing. So it's all nonsense, bro. It's all who cares? Who cares? That's my final thing on it. For those of you that did take GJ, again, as it moves down here, book 50%, 80% of your profits, and just hold the rest. See what happens. See if we get a little deeper of a correction down to 159.43. It never really gave me the full pullback that I wanted. It was supposed to be a dab. Hey, it looks like a dab. Looks like a dab on my screen. But with that being said, family, I do love and appreciate y'all. If you guys want to get into the inner circle or learn further in-depth course stuff, you guys can absolutely click the links that will come in the chat if the bot ever gets to it. With that being said, I'll see you guys Friday, family. Make sure you guys tune in to Abel Melendez on YouTube. He'll be live in 5 minutes, going over even more stuff at a probably a more basic level, right? He's that clean cut, beginner friendly type of guy. So definitely go check him out, let him know what you guys think, and I love and appreciate